Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, January 22nd, 2026. It's 11:23 a.m. Eastern Time, so I'm starting the video. Here's what I'll do in this one. Bulk of the video, I want to cover the charts of various futures contracts. Most of those are not agriculture, just commodities in general. A lot of commodities trade futures. They do not trade. Some do, but many don't have ETFs or ETNs. For those that do, I'll highlight those. If you follow me for a while, I've been, adamantly longer term bullish on commodities, making the case really since really about when COVID hit that commodities have ended a secular bear market and embarked on a new cyclical bull market. And we've recently completed what appears to be a corrective wave, with the next wave up likely to either underway now or be underway soon. Either way, just like the stock market, there is a high degree of variability within the commodities arena. Rough rice futures have nothing to do with orange juice or lean hogs or natural gas, right? At any given time, I'm usually short one, long another, just like in the stock market. So what I'm going to do is get into that real quickly. I'm just going to update, just kind of tell you my thought process on the market. I've done a lot of in-depth videos lately. So this one yesterday, somebody asked, this was right around the time I got that post out to you where we were bouncing back. We had yesterday what I'm going to call a hard taco day. When you go to a Mexican restaurant, they ask you, do you want the soft or hard tacos, right? Soft shell or the hard shell. Trump pulled a hard taco yesterday, not even soft. He cowed down completely, and everyone knows that's what he does. It's his talk threatens tariffs, which everyone knew would never come to fruition. We knew he's not going to invade Greenland, or most rational people do. So he took the invasion off the table. He dropped the tariffs, all on what quote unquote White House is saying is a rough framework. Absolutely nothing concrete. We're not buying Greenland. I would be shocked if that happens. And anyways, we all know. So that's anyway. The market liked it, but the market just went back to where it was before Tuesday. And so it hasn't negated the sell signals. However, my thought process, just so you know, was on those backfills of the gaps. Yes, I think it was an objective area to add on, as I said in the video, to any bounce back to resistance once you have sell signals, but not to keep adding. So there's a big difference, many times, and I've made clear for months now, any short on the index was not an all-in moment. When we're above the 200 days, when the majority of Mag 8 stocks haven't broken down or triggered sell signals, it is absolutely not, and I continue to reiterate that, a all-in. It's just a soft, partial position if you're taking a swing trade, and adding if and only if the evidence continues to develop. And those are all the things I've covered with the market leading things. So my plan is to sit tight, adding only on weakness. In other words, if the market goes lower and gets rejected. So in other words, on a trade, I'll either take a hard entry when something breaks out or breaks down. A hard entry is a full position, or quite often I'll scale in if I'm waiting for additional buy and sell signals. And on a scale-in plan, it's not as simple as just scaling in and keep adding every time there's a bounce back to resistance, because at what point do you stop? You're digging in a hole. If you're going long and something's dropping, and you keep averaging down, you might say, oh, I'm lowering my costs. Well, it also shows the trade's going against you. Retail investors, this is something I've learned and read years ago, tend to average down on stocks they like, with that mindset that they're lowering their cost basis. Whereas professional traders generally will only average up on a position, meaning buying at less favorable prices. Why do they do that? Because it shows that they're right if the trade's moving in the direction they expected once they started a position. Now, I'll do a little hybrid of both. I will do that, average down or up on a position. And again, it's just backwards when you're shorting. However, I'll have a predetermined plan, and if I'm averaging in, I will not add or dig in. So basically, the easiest way for me to explain this is, if we go much higher and take out those gaps, take out the previous sell signals, it just it takes away the case that we've had for entering and starting a scale in on the indexes on the Nasdaq 100. And one of those things as well. Here, let me get to the next one. This is relevant as well. So that was right there. I think somebody asked today a related question, at least related in my opinion, about IWM. So I referenced the post that I made yesterday, late yesterday, the one I just covered, or my reply, I should say, comment reply. And as far as IWM, great question. My quick answer, again, today will help to confirm whether or not this is a good time to add to an IWM short. Basically, I know this has nothing to do with IWM, but it kind of does because it's the market. Basically, I want to see the select MAG 8s that triggered the next sell signals I was looking for to remain on those sell signals by the close today. There's the operative word. For example, Alphabet broke and closed below the primary uptrend line on Tuesday. Remember, that gave me a check mark. I just recently covered that. Followed by a back test and a close back on, but not above that trend line yesterday. As of now, and this was an hour ago, hour and a half, it's trading slightly above that trend line, but all that matters on the daily chart is how it closes. All right, so in other words, 4 p.m. today, hopefully will give me a little more color or insight as to what's going to happen. Is this just a reflexive bounce from the hard taco from Trump, or are we going to keep those sell signals intact? Again, trading on the daily time frame, all that matters is how we close the end of the day. So right now, I'm in hold. I'm no desire to add, and ditto for the others. As long as the majority of those MAG 8 stocks don't undo any of their recent sell signals, then yes, IWM will offer an objective short entry add-on. Let's talk about that real quick. I'm probably getting off on a tangent because I do have a lot of commodities I want to cover. So IWM, this was our short entry on January 16th right here. We just, on the 60-minute chart, we had just broken down and back tested that minor trend line with a next sell signal to come here. So our short entry was right here. I'll go to the live chart. That was, what is that, a week ago? Right, no, that's QQQ. Right here. And IWM right now is up about a little less than 2%. Less than 2% above that entry. That fourth target on the 60-minute chart was about a 7.5% drop, a little better than that. So we're still within a reasonable RR and still below that suggested stop that was hand drawn in, but it's getting close. But again, you might say, oh, you're up higher. It's a more favorable price. I'd like to see how today evolves. And then on that, before I move forward, let me just make sure I've covered all the questions. These are the recent ones. That was just a comment. This one, AVD, I did follow up. I always encourage you, if you're interested in any of the any particular trade, come in, check the comment section, or just come into the site. Even if a lot of times I'll post a reply to a question, and it might benefit you. You might be in that trade or be interested in it. So I would encourage you to check the comments from time to time. So AVD did go on to break out above that $5 level. So there it is. So as long as right now it's a breakout, all the better if we can close comfortably above it, like where we are now, 513. We're above the trend line. You can see clear breakout. Volume looks okay so far. We'll see how the day finishes. And then finally, again, this bears repeating. The stock market has gone nowhere. The S&P 500, which I don't often trade, my preferred trading proxy is S&P still in that trading range, multi-month trading range. QQQ, which is a more concentrated view of the market, the big stocks, MAG 8, is still locked in the multi-month trading range, still off its high. So it's a go nowhere market. So investors or trend traders have made absolutely nothing for months now. They've gone up a little bit, they've gone down a little bit, and they're right back to about where they were, in October, or give or take. And yet, remember, the only way, or the best way, I should say, there's two ways to beat the market. Either you're very adept at trading just the indexes and being short when it goes down, being long when it goes up, and sidestepping the periods where it's not tradable, or you beat the market by superior security selection, and that's what we aim to do here. If you look in the trade ideas, after the first of the year, I updated most of them. Click on trade ideas. Let's go to active trade longs. We still have and have had throughout last year many more long trade ideas than we do short trade ideas. So remember, the equity markets I'm always going to analyze because that's the stock market. Everyone wants to know what the stock market's doing, and it will help to align. You will see a shift at some point when the 200-day moving averages are taken out. You're going to see more short trades, fewer long trades. But we had maintained, and many of these they're still active. Most of these are updated every now and then. Some become stale, and just bump me if you have a question on one I haven't updated in a while. But that's the long trades. Here's the short trades. And as I've mentioned, we've had in the last 6 months when the market's gone nowhere, we've had a lot of longs and a lot of shorts hit their final or multiple targets, some of the earlier targets. And we've even had quite a few of these short trades hit final targets for huge gains. And that's in a bull market that is just fresh off all-time highs. God forbid when the stock market finally does have a correction or a bear market, these short trades are going to scream. And a lot of these are ready. They're primed, ready to go. Shopify, Master, Visa. I don't update these on a daily basis, but I will from time to time. They're ready for the next sell signals. Here's stock market new high. Visa, we shorted here. We hit my first, second, third target. I told, all along the way, updates saying we're in a trading range. When T3 is broken, be a quick road down to T4. We hit T4, and we've been dancing on it. So the same thing that I said back here, once T3 goes, which we set up a trading range, we go to T4. Right now, we're right there at T4. Support is support until unless broken, but that's your next sell signal. If you've been in this one or want to jump in it, or you took profits at T4, game the bounce, either way, there's many ways to skin a cat, many ways to trade a stock. But all I can tell you is that's still an active short trade. When we shorted here, I give you a total of 6 targets. Oh no, I added this one on September 3rd, T6, and so that's still the next target. And again, a lot of these trades. So I don't update them on a daily basis because there's too many. There's just too many trades. There's Shopify, shorted there, hit T1 zone, top of the zone, 200-day moving averages, and it's simple. So once that first target zone is taken out, and we go down to T2. And so again, this is security selection. This is how you beat the market. Short the most bearish, long the most bullish. Favoring, more long trade setups and a bullish trend. And then once we start taking out the 200-day moving averages, whether that happens weeks from now, months from now, or years from now, it'll be months. But once the 200s are taken out in the equity markets and my next sell signals are triggered and we go to a full short position, you're going to get a lot more short trade setups and fewer longs. Okay, and then the quick update on the equity markets, just before we get to everything else. So there's the gaps. This is the the gap down. That's where we closed last Friday. Remember, Martin Luther King Day was Monday, so markets gap down, and that's basically we're right back to where we highlighted these back tests of the gaps yesterday. QQQ, right there. SPY is actually a little still shy of its gap right there. So SPY, the S&P 500 could go up a hair more. There was a reaction low right there. That's so far where they stopped. And again, I gave you the futures and all that. So we're right back about where we were yesterday. The markets are slightly up today, but again, still providing an objective short entry. Although, like I said, my preference was yesterday on the futures, which is my preferred trading proxy. That's my add-on, but not adding above level. Again, anything's possible. But I talk in probabilities, so if we start going up, I told you yesterday I don't want to see a back test of the trend. We could certainly do it, and I'll highlight it at the time as an objective short entry for those that might not have a position. But me, that's good right here. I want to see us reverse now, and very eager to see how today closes. All right, now for the rest of it. All the other on my screen below, I have a lot of. I'm on this is a big 43-inch monitor. I've got multiple charts on here, and I have other monitors, quite a few on the other sides of this one. But down below, all those little boxes, those are all my futures charts that I actively monitor. From time to time, I'll change some, but there's a core, uh, subset of futures that I'm just watching all the time, include especially the indexes. This is an NQ, NASDAQ 100 futures, and I'll watch it on different time frames. But I'm going to go over those now and talk a little bit about commodities. Before I do, let me just show you my thoughts on commodities. You have DJP. This is the one I use as my inflation indicator. I told you I'd get to it, and I never did, about how these and I'm not the only one. The government reporting of inflation is just grossly distorted, and I understand the shortcomings of the calculation of the CPI and even the PCE, putting the biggest weighting on owner's equivalent rent. Let's not get into it right now, but we all know that commodity prices, especially crude oil, obviously that's one of the biggest components. Natural gas, energy commodities, that's a big part of everyone's living expenses. And commodities as a general, food, you have to eat. Maybe beef goes up and you can buy chicken for a while, but if chicken and pork start going up too, the proteins and the grains. And but I wanted to say this is the case that I've made repeatedly, really since the COVID lows, that commodities ended a secular bear market right here when the stock market bottom when COVID hit. We had a bull market that peaked in '08, right during the financial crisis, actually. People were flocking into commodities. Had a textbook looking bear market, lower highs and lower lows, right? Ending with that one. You even have, looks like an Elliott Waver would say, oh, that's a nice P5, primary 5-wave, wave 1, down, 2 up, 3 always being the largest, 4, 5. Perfect fit. Again, I'm not an Elliott Waver, but for those of you that are, that probably would qualify. And I've made the case repeatedly that this was most likely the first leg up in a new bull market with a corrective wave. And that corrective wave is over, and that's why I'm gonna continue to cover and highlight commodities as trade ideas. So you can see we're getting close to punching out those previous highs right there. DJP is just one of many commodity tracking ETFs or ETNs. Here's DBC, but they're all singing the same song. Peaked here, troughed here. Powerful first leg up. I mean, that's look at that. And this also speaks to my higher rates over time inflationary thesis as well. I think you'll see, as commodity prices continue to run up, invariably that passes through into inflation, the cost of goods. Remember, commodities, the commodities in here, which all trade futures, some trade ETFs, are not what's in. Crude oil is in the and heating oil, those kind of things are in the CPI, but what's not are wheat, corn, soybeans, but yet they have a box of cereal, a loaf of bread, the finished products, not the raw commodity. But as we all know, wheat can only go up so much before General Mills is going to raise the price of a box of Cheerios or shrinkflate it, keep the same box size but put less in the packaging, lower weight volume. Everyone knows about shrinkflation. So let's get into all these and I'll go over where the opportunities are. And just like the stock market, guys, at any point in time, I'm usually long certain commodities and short others because there is absolutely no correlation or relationship between rough rice futures and orange juice or natural gas or crude oil, right? So just like the stock market, you can profit shorting in a bull market in commodities, and you can profit going long commodities in a bear market. Again, if you're being selective, long the right ones at the right time and short the correct ones. So, all right, let's go and dive into that. And once again, guys, I'm just moving as I do when I'm analyzing these charts every day. I'm moving from left to right. And unfortunately, I can't slide them and reposition them into where I want. They just kind of populate, and if I enter a new chart symbol, it's very difficult to categorize these on your desktop bar with this platform. So what I'm going to do here, you're going to notice it's kind of a potpourri mix, and I may even hit on, as I go from right to left, I may hit on a longer term time frame on a particular one. This is silver. I just updated this yesterday. We're waiting for gold. Gold has to break down, like I told you, and silver. There's a primary uptrend line, still divergent high. One of the best potential trades when the parabolic rise in silver finally breaks, but it hasn't broken yet. And again, to get a jump on it, this is a 6-month, 2-hour candle. That will, I believe, do the trick when this trend line's taken out. But that's silver, yet to trigger. This is NQ. We already covered. GC gold futures, again, same thing. You have the primary trend line right here. It's comfortably above it right now. Okay, here's GF, feeder cattle. And feeder cattle, this one, I've just, it needs a roll. This is January 29th, so here's the newer, more liquid one. Let's just look at the March contract. Some of these futures will roll every month. Some are going to roll every quarter. Okay, I have this resized. And here it is. So this one, I think there's a trade to be made. I'm not crazy about it, but I've covered this one, highlighted. There was a divergent high, nice, beautiful trend line break. Gave us a nice short on feeder cattle. Divergent low, and the same, technical, conditions that work on, trading Bitcoin or the stock market or an individual stock work just as well on commodities. I like to see positive, aka bullish divergence. Trend line breaks, probably add one right there. There was your breakout, falling wedge, and it's just been, these are just swing tradable instruments. This divergent high, it's from experience. It may do the trick, and I'm highlighting it for those interested, but it wouldn't surprise me to see it extend these divergences a little bit just from the look of the PPO turning up here, making a bullish crossover. We certainly had a impulsive move down. We see a couple trend lines broken. So keep an eye on it. The next move will be a short, most likely. Cattle prices have gone crazy due to screw fly and infestation and all that, having to put down a lot of heads of cattle. But either way, I wanted to say this is on my radar for a short. Oh, and there's a break of 353.47 should do the trick to get that one going, whether or not we make a marginal new high. Natural gas, I have different time frames. This one's an 18-month chart. If I don't mention it, guys, it's right up here in the top upper left-hand corner. A lot of the charts, like that I've already showed you, are either going to be 60-minute or 2-hour, meaning 120-minute candles. This is my daily chart of natural gas futures. We're right at resistance right now. It's a big divergent low. When you see all this, it means I put these annotations on a different time frame, a shorter term time frame. But we also do have big positive divergence on the daily chart. This is one I've been looking. This is a bottoming play. I've made that case over and over and over on the long term charts. Natural gas pulling back after a huge long trade last year, 100 and something % gain off the bottom, nailed the top. Pulled back to that uptrend line. I don't have that chart pulled up. It's on another charting platform, but heck, I can pull it up for you. All right, commodities, natural gas. That's what I want to talk about here. Natural gas weekly. This is the one. And so this is it. Last year, we went long nat gas off the lows for the same reasons now. Positive, aka bullish divergence. But this was a trade we hit to the penny. This was such a precise call. Had a long-term target of 490 that was hit in the Sunday evening trading session, and it's one of those great examples I use as why trade futures. My target was hit almost to the button. I think the high was like 490 and a fraction of a decimal after that. Was able to exit that trade, and but then the reversal came that evening. And UNG traders, you still had an opportunity to get out, but you missed the turn. And by the time trading opened up on Monday morning, UNG and natural gas had reversed pretty quickly and given back, I forget what it was. But either way, and then at that point, I called it back to this uptrend line, was my pullback target, and we've hit it. And we had another long trade. It ripped there, and we hit it just again. So this is that big pop you see here. And I gave you, at the time, I told you that, expected a pullback off my initial long-term trend target there of 490, with the next and still my current next target about 640. So there's still plenty of upside. And again, to reiterate, natural gas, it was a bottoming play back then. This is $1.50 right here. Um, this is natural gas. Yes, I understand there's a surplus, there's a lot of it, but it has storage requirements and things that make it a little bit different than crude oil. And it's a function the supply and there's supply and demand variables and there's production variables, and production variables tend to be when oil prices go down, they start capping wells and there's less natural gas production that can help natural gas prices actually go up. Either way, they're not going to give it away for free. So that was for long-term trade, you buy it at the bottom of the trading range. It never gets cheaper than this. Anything cheaper, they're just not gonna, it's not worth it for them. So either way, we're in a commodity bull market, and a lot of things are going up, and sooner or later that will permeate and be reflected in the CPI and PCE. All right, so there's that. Let's move on. I've got a few more I want to cover. All right, that same natural gas daily chart we are just looking at, I stepped it down to a 2-hour time frame, and that's where you can see these divergent lows, divergent lows, divergent low, all followed by pops. And this one really stuck, and it blew out this trading range, so a basing pattern. So that to me is longer term bullish. Like I said yesterday, you can wait for a pullback. I wouldn't chase it at this point, but either way, and it also speaks to the overall. Most commodities right now, in my opinion, are bullish. With a few select, I'll get to a few more potential shorts. And the shorts are the ones that have gone crazy. Like beef prices, cattle prices. Like I said, there are alternatives. Natural gas, by the way, is an alternative. When crude oil or coal or whatever gets too high, they'll turn and convert and start firing natural gas plants to make power, electricity, energy. So these are the competing energy sources: natural gas, crude oil, coal, and same thing with beef. When last time I went and saw bought some filet mignon, it was what was it, like 30? I forget, $36, $40 a friggin' pound. Yeah, you will make a lot of people start to think, do I need this sirloin steak or this filet mignon or the T-bone porterhouse, or do I, should I get pork chops tonight or chicken? And that's what happens, and it happens gradually but steadily. So that kind of keeps prices in check right there, and that's why, on the commodity trades that we've shorted over the last year, many of those were at extreme highs, where again there's going to be a ceiling or hard resistance on the demand side, demand destruction it's called. When prices get too high, especially for those things that have alternatives. Orange juice was a great one. We shorted that last year. Then we went long this year. I'm going to get to that in a second. And again, you don't have to drink orange juice. You might like it. Might be your habit in the morning. But there are a lot of people when, a half gallon of Tropicana goes from whatever it is, I don't know, what's it cost? $3, $5, $6, and $7, $8. You might start, buying Tang or whatever, or just an extra cup of coffee instead of the OJ. Here's the VIX futures, my preferred trading proxy. There's a lot of ETNs and ETFs that track them out there, but bullish falling wedge. The sleeping giant appears to have been woken, but we also hit right into resistance. We had a resistance target level there. I believe I covered this one recently. And that was with the little drop that we had recently. This was the hard taco maneuver. And it's taken again. It took the markets back to our recent sell signals. When I covered, we had the sell signals on the market here and coincided with this. So it was good for a quick, I have to measure this way. I can't move right on the trend lines, or they get moved to the, what is that, 12, 15, probably about a 15% pop in the VIX. And yep, 14% from the breakout point right here. And back to where we were. Look, good support. So what I said in the beginning of the video, I expect my preferred scenario, again, I have enough right now, my fill of index shorts, what I'm comfortable with, ready to add if I need to, or deduct and close out if I need to. If Alphabet fails, or maybe it's a one-day recovery and then a failure back below that trend line, and the rest of those fangs keep on the sell signals, This is probably, there's your first punch up, second punch up. The next one, I turn my focus to the longer term chart. This is only a 3-month hourly chart. I've covered the VIX, spot VIX chart quite a bit recently and showed you that this is woken up. It's coming off a divergent low, just like this divergent low, just like this one, just like this one, just like this one, just like that one. Those were all high double digits and even triple digit, easy, well into the triple digits, especially these two here that came off divergent lows. So um, that's very much a likely and even my preferred scenario. I just feel, with this kickback rally and, alphabet back above the trend line, I can't tell you with the highest degree of confidence. But should we reverse and close red today, that's going to be a big start. And like I like in the market, the stock market, like I like to say, the redder the better. All right, there was the January. I just rolled into the February, so I'm going to close this out. The January's just stopped trading, and that's why you don't see the pullback here. So every now and then, these things roll and close it out. That's why we're on the February's now. Next one up. Again, I told you there's no rhyme or reason to the order we're going to see here, but this is my NQ daily chart. I'm going back 18 months on this one, and this was a uptrend line. Really formed this triangle pattern. You can, yeah, and it's still valid all the way back here. There were a few spikes down below, but more so right here. And so this was a false breakout above the triangle, very muted, no follow through with a downside break and a back test. And so I can tell you from this perspective, and I can even borrow this trend line and retask it a little bit. Let's do that. So now this is your current downtrend line off the highs right there. And I will find it very hard to spin that as anything but bullish if NQ pops through that trend line. What I can tell you with fact, two things. Number one, I don't think that's the most likely scenario. If it were, I would be long at this point, or at least not short. I think the most likely scenario is a failure. That failure is also going to be, it's backed right now. If you look closely, let me tighten it up for you. Remember, we're coming off a big divergent high and multiple sell signals highlighted at the time here and here. Breakdown back test of that purple primary uptrend line, secondary trend line break, and back test and rejection. And now this trend line break, and we're below it. So my preferred scenario is we get rejected here on this back test. We go down, and if you've been following me for a while, you've heard me say this now literally dozens of times. I'm waiting the most powerful sell signal I can think of and have been talking about for a long time, and which would be my all-in moment, full short on the market, is a break of the October 10th lows right there. I think, yeah, the key October 10th lows. We successfully tested those in both the S&P and NASDAQ 100. And as I like to say, support is support until unless broken. So that's the big number. And we get that, we start to get what I call waterfall selling. That kind of drop in the market where you wait 3-4 days, ask me, Randy, is it too late to short? I'm probably going to say, yeah, in my opinion, because we probably will go pretty quickly if and when. You can see those are the two initial targets that I have right there. But again, first things first, we do this. Guess what, guys? It's going to increase the odds significantly, in my opinion, that the NASDAQ's going to want to make a marginal new and still divergent high. Regardless, we're in a trading range. We also had that triangle I just showed you there. Let's move on. I've covered the equity markets enough lately. But this is, again, just a different perspective and a view and with levels to watch and react to, whether you're bullish or bearish. So if you are bullish, you do want to, I think at minimum, see a break above these recent highs right here, which will also take you above the downtrend line I just showed you and regain this broken uptrend line right here, or triangle. So bullish, bearish. Right now we're on a sell signal, so that's why, again, still holding the shorts regardless of a little hard taco rally. All right. SB, these are sugar futures. You've got a downtrend line. We're looking at a 6-month chart with 2-hour candles. We're coming off a divergent low there. That is divergence, aka bullish or positive divergence. It gave us this leg up here, but you can see we have, this is a first price target, 1337, with a buy signal to come and a pop above this downtrend line. Target 1, I'll have to modify. Again, a lot of times these are older levels, and I'm telling you right now, I'm going to take that down. It'd give you a second target there of 1581, I'm not super crazy about it because after that divergent low, we've been moving sideways. However, this is also a trading range. You can circle tool will probably fit it best. So there's a trading range. We pop that. That's going to be bullish, and it could open the door for a run up all the way here to that 1686 target. So I'd have to look at other time frames on this. Kane. Oh, and I told you I would try to. Yeah, Kane. We still have Kane, an ETF or ETN, technically speaking. And look at that. Positive divergence, divergent low. There's that little trading range I just showed you and the downtrend line I just showed you on the futures. So consider this a setup. A setup with a buy signal to come on a break above the uptrend line. First target 1017. And again, you'll also want to look at the futures. Even if you don't trade the futures, you can get free charts from investing.com, real-time futures charts. You don't even have to have a plan, a paid plan with them. Or you can go to your broker. A lot of them, like Thinkorswim from Schwab, they'll give you futures quotes real time. And so my point is, I'm not encouraging or telling anyone what to trade. I can't do that. You need to know your stuff if you're going to trade futures. There's a lot of nuances. However, if you're going to trade commodities, you are severely remiss if you are not watching the charts of the futures, because all these commodity tracking ETNs suffer from decay. They're using futures, they're rolling futures. So and so they don't do a perfect job. They do an okay job. And again, if you don't have a futures contract, permissions to trade futures, then you don't have a choice if you want to engage, if you want to profit from a move in sugar. So that's that. So either way, nice looking setup. And again, guys, that's the whole theme of bear market, and so many commodities ended right here in 2020. And we are, by all metrics, the simplest metric. A downtrend, again, defined as a security making a series of lower lows and lower highs. And an uptrend is simply a series of higher highs and higher lows. So far, this low right here is above this low. And if we can start to rally and break that trend line, do that, then we're going to have the next leg up. And that's, just where my cursor is. It's not a price target, but that's 100% rally right there in sugar if that happens. Okay, let's move on. CC is cocoa futures. Do we still have NIB? There used to be an ETF. Remember, I talked about this a few years ago. Of course, their timing is so perfect. If you've been doing this, what I do for a long time, trading and watching the financial market, it's laughable how these ETF companies come out right at the top when Bitcoin's about to peak. They'll come out with a ton of Bitcoin new ETFs, or when FANG's popular, they'll come out with the Mag 7 or the FANG tracking ETFs. They did that with FANG, and then of course the N and Netflix died and it was no longer a big one, but the ETF was named FANG. It's funny. And so the same thing happened here a few years ago. A lot of the agricultural commodity ETNs that I tracked were discontinued by the issuer due to lack of interest, because they were just coming off a multi-year bear market. But we had ended that, and the bull market had started. They just wouldn't know. Most people wouldn't know a new bull market unless, even if it fell out of the sky and hit them in the face. But either way, there wasn't enough interest, so they 86 those. And so that's where I'm trying to recall which ones have been discontinued. Either way, it's in free fall. I think this one might have to go down a little more first. I'm not going to spend a lot more time. And by the way, this is not an all inclusive or comprehensive review. I'm only going over the futures that I have on the time frames that I'm tracking. And what I do is if I see one I like, then I start to, and I won't do it in this video, it would take forever. It would be a 3-hour video we'd be going through. I look at multiple time frames, other time frames, daily, weekly charts, 60-minute charts, and before I decide to make take a trade personally or make it an official trade idea for you guys. So hopefully there's some value here in case some of you, I know that quite a few subscribers on the site do trade commodities, even the obscure ones, which we're going to get to in a second. Oh, like this, live cattle, lean hogs, that kind of stuff. Okay, this is RTY. Again, I'm just moving from right to left. 6-month chart, 2-hour candles. That is every bit of divergent high. There was our sell signals. This is where I added it as the most recent short trade. And so now we hit this. See, you have a series of uptrend lines. And now we hit this one. This is the one that now needs to break. It's we made a marginal new and still divergent high. I've already given you my thoughts early in the video of what I need to see to add on or validate a new short position in the for anyone that doesn't have it in IWM or RTY. RTY are the futures. IWM is ETF. First target, second target, third target, and final near-term target. Again, just playing the game of from where we're at now, assuming we get a sell signal, it'd be a drop of roughly 12% right there in the smallies. But you're going to have to see the large cap buckles. Right now, everybody's foaming at the mouth with the whole January effect thing and all that stuff. All right, next up. ES, S&P 500 futures, look at that, perfect. You don't see gaps often in the futures, but you did in this case. We had the nice gap here, and we've backfilled the gap. Remember, futures trade virtually around the clock, the stock futures, but they do shut down Friday evening and pick back up Sunday evening, and so that shows there was where we closed Friday, Sunday trading into Monday in this week in a perfect, that's nice resistance. So while I can say that's an objective short entry, for me, again, I want to see a rejection first. That's my preference. CW wheat futures, still one of what I think has potential as a very long-term trade. One of my top picks for this year. It was last year and it just didn't pan out, and it still is this year for commodities. What I can tell you definitively is this is by the way, 6-month 2-hour candle chart. Divergent low and a nice rally. Ended with a divergent high. Another divergent low. Took out this trend line, back tested it. We have price support right here. And we're pounding out a bottom in wheat is what my belief is. This is the daily chart of wheat. You can see that nice clean downtrend line right there. And 60-minute chart. Let's zoom back here. Again, coming off a divergent low. And I'll probably add an additional trend line here. I don't have queued up my long-term. Yeah, let me do it because it's important, because I just said this is one of my, I think it has the potential to be one of the nicer trades in 2026. So I'm going to go back to commodities. I'm going to look at my wheat weekly chart. I've covered this with you many times in the past, especially last year. Nothing's changed. My logic and reasoning for being long wheat remains still very much intact. It just hasn't gone anywhere. So it's a case of it's not lost money. It's not making money. Although we've had a lot of pops off there. This is a secular bull market uptrend line. It comes off the 2000 lows. Think .com bubble popping right there, right? Beautiful, well-defined long-term uptrend line. And I started highlighting it being hit back here, really in 2024, 2025, and we're holding it. It's holding like a world champ. Now, if we break it and we solidly go down, we're probably going to go to the next support level. But I don't favor that. This is my preferred scenario. Why? Just because it hit a trend line? No, because of this. And here, let me move up. And this. So when I look at the indicators, I see my beloved positive, aka bullish divergence. Prices making lower lows with the indicators making higher lows. The last time I had a divergent low on the weekly chart, which is what we're looking at here. This is a long-term, multi-decade chart going back into the mid-90s, weekly candles. So we had a divergent low there, highlighted at the time, traded at the time, 212% rally, ended with, you got it, a divergent high, negative divergence, parabolic uptrend. Wheat tends to go parabolic just like silver. And as I've told you many times before, parabolic uptrends rarely end well. This is swing and trend trading, really, when you're looking at a weekly chart. And again, it's the nature of this beast. Natural gas, silver, Bitcoin, those type of things tend to do these parabolic runs. And again, they do not end well. That was a 380% rally. It was not random. It came off this divergent low right here. We started ripping. And then we ended with, yep, you got it, negative divergence, divergent high. The parabolic trend line broke, and the drop was, I think I measured it. Where is it? Where is it? Where is it? I don't know. You can do the math on it. We dropped from about 1350 down to, if you want to just use that low, about 400 and something. So again, watch, rinse, repeat. Positive divergence right here, 110% rally, right? Let me box tool this. Well, you can see 110% rally. Divergent low here, 212. Okay, so that's it, guys. So this one, I think, offers excellent RR, risk reward ratio, for a long-term trade. You can set your stops somewhat below the trend line. It's a weekly chart. You can give it a week, couple weeks, and up targets right there. You can see my first and second target, and third target right there, those previous highs. So it's a lot of upside potential in wheat. You just got to kick it into gear. And of course, there's seasonality and crop factors and tariffs and all this other stuff. But again, that's it. And remember, we have no control over those things. But and if that's what you do, if you trade off fundamentals, then good for you. I think technicals are a much, much more accurate predictor of where prices are going. And fundamentals, it's like driving, your car looking in the rearview mirror. It's in hindsight. By the time you read about something, it's already happened, and it's usually priced in, or it's usually priced into the stock, even if it's just been disclosed. Because a lot of news, again, those in the know, whether it's a dealings on a company where insiders are trading on information that they know, both legal and illegal insider trading. Legal insider trading is just the insiders of the company who can then acquire or sell stock they own. And of course, we all know what illegal insider trading is. And then when it comes to things like commodities, yeah, there's the farmers that are going to know first and foremost how their crops are looking. And, there's so little birdies start bidding up futures and laying bets and spreading the word. So that's why charts are going to be a much more accurate predictor of where things are going than you trying to react on reading the latest headline from the Wall Street Journals or Barron's. OJ, we've already hit my second target for a 50% profit. Again, I just don't get a lot of feedback. Someone on the site might even, I can't remember. I've traded OJ for the years. Sometimes subscribers will put on my radar this one. Wherever we entered it, it was a divergent low breakdown back test. Again, it's all archived. It's still an active trade because I give you a total of 5 targets. So we already hit my second target. Oh, there's the entry point. That was my measuring tool. We already hit my second target for a 50% profit. And then it pulled back. So if you missed it, or if you took it and then you saw this divergent high, negative divergence, you swung it back down. This was a beautiful re-entry point. I've highlighted this recently. It came back to T1 twice. You've had 2 opportunities on a pullback to support the former first target, which was resistance. And now it's moving off that level. As soon as it pops this high, it should run up, hit my third, and ultimately fourth target. I expect a reaction on T3. Chances are, we'll see when we get there. And then so T4 and 5. So if the final target's hit, that's going to be 126% profit on that one. ZS soybeans. We do have an ETF for you on that one. This is a simple, very tradable security. Watch, rinse, repeat. Divergent low, rally. Divergent high, sell. Hold on. Let me be more specific. Divergence is not a buy signal. But what is a breakout above resistance, downtrend line. Breakout, buy signal. Divergent high, sell signal on the break of the bearish, bullish falling wedge, bearish rising wedge. Bullish falling wedge, positive divergence, breakout. Bearish, divergent high, there was actually a little minor trend line there, break. Bullish falling wedge, divergent low, ripped. Divergent high, this is the negative divergence, drop. And positive divergence, all right? It's just mechanical, blocking and tackling, daily grind. They all don't play out, but a lot of them do. And it's a numbers game. So that's what I'm doing this video. Spread your bets. Keep your options open. Everyone comments on the equity markets. Very few comments on obscure trades like this. But this is where, again, it's a way to diversify and a way to make money if you trade them. So we have a divergent low. DH, it's been diverging. Second marginal move, still divergent low. probably drawn uptrend line too off the lows recently too. Let's look at that. Yeah, there it is. We're trend line support. Next buy signal coming, a pop of that 1071 and a half resistance right there. Next target, next targets, plural. There you go. Sorry, I thought I'd pause the video there. Dollar futures, I was just collecting my thoughts on it. It's grinding around aimlessly here, a little trading range, divergent low, pop, break, buy signal, divergent high, sell signal, back test of the trend line, took us down here, and just been grinding around kind of aimlessly right now. BTC, crypto, Bitcoin. This is the actual crypto color tool. Change the color. As covered many times in the past, we put in a big divergent high here. This is wash, rinse, repeat stuff, guys. Divergent high, sell signal, bear market. Divergent low, breakout, bull market. Divergent high, sell signal 1. Then we took out my secondary trend line, sell signal 2. Been back tested from below. I haven't changed my outlook. I still, expect after the rejection off, I do expect a rejection and a move down here to the next target, about 73,500 on Bitcoin. And if it can get down here, because of the scope of that divergence, I would like to see it get down to at least this level before the next long entry. When I say the next, remember, we popped it recently. We had, this is what IBIT, the Bitcoin ETF, looks like. There was our divergent high, sell signal 1, sell signal 2, took out the 200s, and then I decided to game it for a bounce here. I gave you 3 targets. I removed T3, like I said, because of my uncertainty. Didn't want to short it at that time, but we sidestepped the give back, and we almost hit T3. Recently, we broke this trend line, so I still have that preferred target zone down here on IBIT, which is the main Bitcoin ETF, one of the most liquid. And so that's still my primary preferred scenario for Bitcoin, more downside. I think this has most likely, the counter trend bounce has run its course, the one that we gamed. HG copper, divergent high, sell signal there. Highlighted recently. Uptrend line right there. Break of that level. It just hit that 569 target. Once that breaks, this is your next stop, 553. And then finally, I'm calling it down still to this level here, about 531 right there, and the uptrend line, whichever comes first. It'll probably be this uptrend line that comes in first. And that still gives you, in copper from where we're at now, oops, did not mean to move that back where it was. I'll have to do it this way, so or else you move the trend lines. Looking at about another 9% drop, 8 or 9% drop down to the trend line. Here's another chart of RTY, except this is my daily candlesticks, 18 months. Those are the small cap futures. Big divergent high, negative divergence, equal highs on the RSI with higher highs and prices. That's still negative divergence, whether you have higher highs and prices and either equal or lower highs in the indicators. And that's it. So we had primary trend line break here, drop down to that 23, 28 support. Marginal new and still divergent high with the most recent breakdown right here and a back test right now of that minor trend line. So I already commented on IWM earlier, what I need to see happen. PA, these are palladium futures. That's the symbol for palladium futures, or you can go with PALL, palladium ETF. You have this a triangle pattern right here. Upside break is going to be near-term bullish, downside break bearish. Downside break is what I would lean towards right now. And target would be the uptrend line. That uptrend line comes off the, the late August, early September lows right there. Any new breakout to the upside, well, it has the potential to put in a divergent high, but like I said, respect either way it breaks, and you guys can trade that as you want. I don't have super strong convictions, but lean towards that downside break. ETH, these are crypto, this Ethereum crypto divergent high, sell signal on the trend line break, hit that 2698 or 2700 target, which is support, if and when that goes, which I favor. These are your next targets. And this is where I'd be interested in if the charts confirm going long Ethereum. ZB 30-year Treasury bond futures. We have an active long trade on the site right now. On TLT is the ETF for this. We went long on, I think it was on this support level here. We made a marginal news, still divergent low, still divergent on the TLT as well, positive divergence that is. And that's it. So again, your targets, check the post on that for the targets. I may have rolled these futures since I first shared it with you. And when I roll the futures, I have to re-annotate the chart. Levels change, and they also don't carry over on the futures contracts. I have to repopulate, replicate all my annotations from scratch. ZN, that's the 10-year. I haven't updated this, but it's in a downtrend. And again, the 10-year, this is the price of the 10-year bond. Shows interest rates have been going up despite the Fed cutting, which, as I said, when you start reaching a threshold, there will be that point. If this continues, if the 10-year continues to fall, I think the market will take note of that sooner or later. BRR Bitcoin futures. Before I showed you the actual crypto, there's a downtrend line, a little wedge pattern. Most recent divergent high, sells, reversal sell signal there. And now we're flirting with this uptrend line and some price support. So like I said, this is just a 2-hour, 6-month chart. I already showed you my longer term chart of the actual crypto, and it's kind of the way I still lean. Crude oil is a hot mess. This chart looks like a sloppy EKG, so I'm not going to render an opinion since I don't have much of one. E7 Euro futures, remember it's just like DYX. You have a downtrend line. Divergent low right there recently popped out. There was a breakout, so this is on a buy signal there. Probably going to continue up till we either hit resistance or put in a divergent high. So there's LB lumber futures looking good on this 6-month 2-hour candle. Right here you had a divergent low, you rallied, divergent high, gave you a bearish rising wedge, sell signal right there, gave you this downtrend, and we've been diverging right here. These are your positive, aka bullish divergence lines. And we recently broke out, went up here. We're back testing this 590 former resistance, now support. And so I think it's an objective long here. Your first and next target there, 627. After that, it gets tough. I'll have to look at different time frames. In fact, hold on. I might have one more for you here. 1 second. That I do. Yep, I did. I thought I did. Okay. Daily chart I had marked up. Nice positive, aka bullish divergence there on lumber futures. This is a 2-year chart, 2 years daily candle. Lumber futures been in a clear downtrend. As you know, housing market's been waffling, struggling. But we just recently put in a divergent low, and you can see my price targets right there. This is the one I favor. 711.66. Always sell below the actual resistance level you're targeting. So that'd give you about a 17% run up because I stopped a little shy right there. All right, next up, we're almost done, guys. I just have a few more. This is PL. These are platinum futures. Remember, I already covered PA. That's palladium. Palladium is in the platinum group of metals. This is platinum, which obviously is in the platinum group of metals as well. And that's it. We had a short on it recently. We put in a divergent high there. It dropped, it then put in a divergent low. Actually, I don't have it marked on this chart. But right now, what I'm seeing, the same divergences that were started here in place at that previous high on these futures have carried over and continue to build. So typically, no guarantees, but generally, the bigger the divergence is, the bigger the drop. So your sell signal now is going to come on a break of this trend line. You have a minor trend line there that might get you in early. Break of that minor trend line, take you down there. And then when that breaks, we'll probably come all the way back here. So I'll just give you a soul. Keep it very simple. There'll be stops along the way, but that should take us back down to that same level again. Talking about a profit, if so, from where we're at now, about a 24% drop in palladium, which is what platinum, I'm sorry, which is what I figure. And then PPLT is the ETF for that. PPLT, divergent high right there. There's your uptrend line. There's your setup, guys, right? Negative divergence, nice looking setup for you. Let's see. Yep, there it is. There's your 24% drop. Okay, this is ZR Rough Rice, 2-year chart with 8-hour candles. Breakout back test. This one's on a buy signal. However, it just hit the first resistance slash target. Once it pops that, this is your next resistance, more of a resistance zone, and then it should let loose after that. You'd target these gaps right here would be your natural targets on RR, Rough Rice. And you can also maybe have might probably have a downtrend line that starts to come into play around that time. Let me try to move this proper. I'm trying to, these trend lines can be a little buggy. There it is. I got it now. So trend line, that's going to come in with the gap right there. This is your initial target, $13,990. We'll call that $14, right? Everybody loves round numbers. That's going to be about a 35, well, a little shy of 35% pop to that level. And again, because, you know, it's probably going to take a little while to get there, work its way up. Okay. All right, this is corn, ZC, 6-month, 2-hour candle. All I can tell you is that support. There's not a lot to like in this chart, but I am bullish on the grains. I already made the case on wheat and soybeans, and they tend to move together. Corn and wheat especially. They're all grown in temperate climates, but those 3 big grains. And here, and this, I also have it on the 1-year, 4-hour candlestick chart. Divergent low right there on corn, and it's been it's moved up off that divergent low. You have this, what I think is a basing pattern here, so it should let loose if and when it can break above the top of that range, which is about 452 and change. That's your first target, 496, and then 515. All right, last but not least, LE, live cattle. I think I already covered feeder cattle, I believe, earlier in the video. These are live cattle, right? Uptrend line, bearish rising wedge, divergent high. I think I highlighted this for you earlier late last year as a short trade idea. Drop right down to that 205 support with a divergent low. Nothing goes down forever. Nice downtrend line break, bullish, divergence. And we've come up, and probably that's about it. Divergent high right here. I wish I had a better entry. I'd probably say that trend line right there, maybe price support as well. And that probably give you another rundown there. I don't have super high convictions, but it is a setup. So if you take it, you short it on the breakdown, and then just set your stop accordingly to wherever, depending on your price target or targets. Woof, long video. We're right at the hour mark. Remember, guys, you can always speed these up. Take the settings icon on the bottom right of a YouTube video and increase the speed to 1.25, 1.5, whatever you can take. Also, note that when you play these videos on the site, you don't get pop-up commercials. If you have a YouTube Premium subscription, you're not going to get them. But if you don't, and you watch them on YouTube, I've noticed you get the pop-up ads on the site. They never pop up ads for me, so just maybe it's my browser, I don't know, but you can try that there. Alrighty, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.